What are some of the typical pitfalls that you've seen emerging managers cause them to fail the due diligence test? Anything that comes to mind?
Yeah, I mean, on the legal side, I strongly agree. I've seen emerging managers come together to raise a first-time fund that failed because they didn't have that track record together. And the LP said, you're 2 or 3 folks who each have their own history and track record, but we want to see that you can gel as a team. So I've seen that result in, failure to launch sort of fund. In terms of the story that's told and the reference checks, I've also seen that. And I think it's a really important point, especially for emerging managers who may be spinning out from existing firms and may be subject to separation agreements, NDAs, and they can't share all the wonderful successes that undoubtedly they are solely responsible for at their prior firm or partially responsible. There are always creative ways to get that information out. And if you can't find ways to get that information out, it's going to make your fundraise much more difficult. And one of the best ways to get information out when you can't be the one to disclose it in a PPM or a pitch deck is references. Let your CEOs of your prior portfolio companies at your prior firm speak for you. I've seen that with great success where references really carried the day for new emerging managers who, for legal reasons, had to be very circumspect and careful as to what they said in their written disclosure docs and how they said it. So I think that's a really important point.